A very good evening, everybody. Welcome to the webinar, How Does Inflation and Interest Rates Affect the US Dollar Index? I'm Ming Hui from Phillip Nova, and this webinar is held in partnership with ICE SG. Speaking to us tonight will be Mr. Jose Blasco, Principal of Traddictiv. And like the webinar title says, we will be finding out from Jose how inflation and interest rates affect the US Dollar Index. Before that, we will hear from Mr. Ian, Sales Director at ICE SG, on an overview of the exchange as well as the contract specs of the US dollar index. Before I pass the time to the speakers, here's a quick reminder that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now, without further ado, let's have Ian speak.
Thank you, Ming Hui. Thank you also to Phillip Nova for inviting us to speak on this webinar. It's always a pleasure to showcase our products to the audience at Phillip Nova. And of course, this topic comes at a very timely manner. Last evening, the Federal Reserve raised the interest rate by another 75% points for the second straight month. So that makes the US central bank more expensive to borrow money. It means interest rate will most likely rise as well here in Singapore. I think the inflation is rising at one of the most rapid pace since the 1980s, and I think the Fed is responding to that by raising the interest rates. So again, a very timely webinar for those who are on this call, and it will be I'll be very interested to find out as well from Jose, how does this rising interest rates and inflation actually how it affects the US dollar index. So for my part, I represent the ICE Futures Singapore, based in Singapore. I'll give an overview for my presentation. I'll give an overview of ICE Group itself, followed by the exchange in Singapore, ICE Futures Singapore, and the products that we have. And also share a bit of a background and history of what is the USDX, how it was formed, what is the composition of the index, and at the end of my presentation, I will have QR codes for some resources that we have newsletters on a monthly basis on the USDX as well as on the various markets that ICE Singapore offers that you can actually go and subscribe to them. It's free of charge, so you always get news about these markets. So without further ado, I'll just continue my my presentation. So who are we, ICE? So you might not be very familiar with ICE as an exchange, the Intercontinental Exchange. ICE is the short name, but you'll be very familiar with some of the products that we have. So ICE as a group is actually a technology company, financial technology company, with three main businesses in our company, in our group. We are listed on the New York Stock Exchange. So the first pillar is a US-centric mortgage technology part of the business that the firm has recently bought a company called Black Knight, $13 billion acquisition. So we are transforming the very analog US mortgage process into a digital. So that's what ICE Group is good at, from transforming analog to digital. And the second part of our business is the fixed income and data services. So ICE has a very big data services that not only have that capitalize on data from ICE, but also on all the other exchanges around the world, both in different sectors as well, not just on the future side. So we do have data feed for multi exchanges, and a lot of other companies uses us for data services. And the last part is exchanges. So ICE operates and exchanges and clearinghouse around the world. I'll give you a summary of some of the exchanges. So definitely, if you don't know ICE as an exchange, you will know some of the products, and we operate 10 different exchanges around the world. Of course, we also own the New York Stock Exchange, so definitely you will know New York Stock Exchange, one of the oldest exchanges in the world. So the New York Stock Exchange is under the ICE Group. We have ICE futures US that of course we have this benchmark for the soft commodities, things like your coffee, your cocoa, your sugar, as well as the indices. We have the FANG Plus. We have of course the dollar index futures that's on ICE futures US. This is the regular size one. And for ICE futures Europe, which is one of our biggest benchmark, is our ICE Brent crude futures. We also have exchange out in Abu Dhabi, which is they have one product which is the ICE Melbourne crude futures, and the representative exchange for Asia in APAC is actually ICE Futures Singapore. So ICE Futures Singapore fairly young. We have operated in Singapore since the 2015, and what we designed this exchange is for is really to target the Asian hours and to offer some of all these global benchmark in a very easy and accessible way for participants, because our contracts are mostly cash settled and they're really based on our successful ICE US and ICE Europe product offering. So on ICE Futures Singapore, right? So you know that we operate 10 exchanges around. So what is ICE Futures Singapore? What are the products that we have? So we have, in terms of equity derivatives futures, we have a micro Asia Tech 30, we have a micro MSCI US, micro MSCI Europe. We have a mini version of the Brent crude oil, which is a very popular brand, which is 1,000 barrels, but you can get it for an ICE Futures Singapore for one contract. It's only 100 barrels, so it's a mini version of it. We have some FX products which are very popular. So like I said, the US dollar index is on ICE Futures US. We have a mini version, which is 1/5 the size, that's on ICE Futures Singapore. We have two very more Asian centric ones. One very localized is the mini US dollar Sing contract, FX contract, FX futures contract. We have a dollar CNH contract as well. And we also have a digital asset future, which is one Bitcoin cash settled futures contract. So all these products that I mentioned actually provides you with different products to manage your different type of risk. If you're looking at the US dollars and interest rate, which is today's products focus, it will be the mini US dollar index. If you have exposure to Asia tech focus, we have an Asian tech indices that comprises of the 30 largest Asian tech companies. So not just the Chinese companies based in Hong Kong, of course, the Tencents, the JDs, Alibaba, so on, but also in Korea, Japan, and Taiwan. And it's all in one single currency in US dollars. So it's you don't have to worry about the currency exchange and all that. So it's all in US dollars. So let's say you have exposure to US equities, and I think mostly people do. You can look at our micro MSCI US index. So this US index comprises of 600 large to mini stocks in the US. That's covering about 85% of it. The Amazons, the Apple, the Tesla, the Facebooks, they're all there. The Googles, they're all there. So this actually is an alternative to E-mini S&P, which is a very popular product, which is about 99% correlated. And of course, lastly, one of our benchmark and most popular product is the mini brand, and that is 80% of all the global crude oil is bench off the ICE Brent benchmark. So we have a mini version, 100 barrel ones that's more accessible to the local participants. So maybe I'll go on to the US dollar index. So if you're unfamiliar with the US dollar index, or another more familiar name will be called the Dixie. So the US dollar index it's not a new index. It started actually not by ICE. It's started by the Federal Reserve back in the 70s. So when back in the 70s, the US dollar was benchmarked to was fixed at what they call a gold standard, which is backed by the gold, which is about $35 per ounce of gold. The $1 US is backed by 35 ounces of gold, which is called the gold standard. So back in the 1970s, President Nixon, they abandoned that gold standard, and they needed a benchmark. And so this benchmark is created. It's called the US dollar index. It's created by the US Federal Reserve. The rights to measure, to the rights to track, to measure, to determine the weights are all being done by the US, the Federal Reserve. But this right has been given to ICE to continue this US dollar index. So the US dollar index, as you can see, the breakdown in components, is actually a measure of the US dollars relative to 6 currencies. So this, of course, are the main trade partners of the US, not from now, but from since back in the 70s to 80s. So the US dollar index doesn't change much. I think the only one change was in when the EU had their common currency, the euro dollar. So you'll see the biggest component is actually the euro, which is 57%, followed by the yen, the Japanese yen, the 13%, about 13%, followed by the pound, which is 11, candy about 9%, the Swedish krona about 4, and the Swiss franc about 3. So this doesn't change at all at this moment. Yeah, it doesn't change. So how do you see the index? So the index is the base value of the US dollar is 100. So if you see it drops to 90, it means that it's a 10% drop of the dollar relative to the values in the basket. That's 6 currencies. So if it goes up by 10, which let's say the index is 110, which has been happening lately, that broke the 100, the index has broke 100. That means a 10% rise in that the dollar value to this basket of stocks. So the main factors that affect the US dollar index is, of course, the US dollar, the supply and demand for it, and the currency that makes up the basket. And of course, when this supply and demand, then we talk about all these monetary policies, the interest rate, other factors like inflation, economic performance, credit rating, market sentiment, all come into play. So this is the contract specs for the mini US dollar index. Again, it's the multiplier. It's 200 times whatever the index was. I took this chart out this afternoon, so it has broken 100, so it's 106.331. That's the index value at this current moment. You can see that on the chart, the darker blue is the mini US dollar index. The lighter one is the US dollar index in the US. So it tracks perfectly because the price is referenced from that index in the US. And the notional value, it's about 19,000 US, and you only need to fork out, for in terms of initial margin, about $300 over. Exchange fees is really low for per lot. It's only 8 cents US per lot. And we all focus at the Asian trading hours. Yeah, so you can get there is pricing and liquidity during those Asian hours. So the benefits are lower margins. You need to put 300 plus rather compared to over 1,000 for the regular one, and the exchange fees are lower, so compared to the ones in the US. These are some of the breakdown of the contracts, the specs for the rest of the products that I've spoken. I'm not going to focus too much. You always can get more information later on. So 3 things I want to leave you with for ICE Futures Singapore. Just know that 0 membership fees, 0 market data fees. The number 2 is we give smaller contract size, so they're mini or micro in size, which means lower notional value, which means lower margins. And 3, they are cash settled. They are designed for the active Asian traders in mind. They are highly correlated to the benchmark futures products in our sister exchange. We have a wide range of products for you. So 3 things to remember on ICE Futures Singapore: 0 smaller cash settled and Asian trading hours. We do have some resources for you that you'll be keen, like I said. So there is a specific mini US dollar index report, as well as a monthly report. These are all monthly, by the way, and they're all free also. So we have another monthly report that gives a macro commentary on some of these markets that we are involved in. So like the energy market, the FX market, the Bitcoin market. So this gives you an overview of the markets, that what has happened on on a summary page, and it gives you some ideas to trade. And of course, this is written by the great team at Traddictiv, which the principal of it is Jose, who's going to speak this evening. These are the QR codes that I mentioned, so you can scan them. The first one goes to our website. The middle one, it goes to our US dollar report, and the last one is the monthly market commentary. So just go ahead and scan them and subscribe, and you get it in your inbox in the next month. So that's the end of my presentation. Thank you, everyone. So if you do have questions, at the end of the presentation, feel free to put it into the chat box, and I can answer them. Let me pass the controls to Jose, who's going to be the main speaker for this presentation.
Thank you so much, Ian. I am in the process of sharing my screen. So just 1 second, and I believe you should be able to see me. It'd be great if you could give me a quick confirmation that you see my screen as I'm getting ready to begin. This is a very exciting presentation because, as you said, Ian, it's such a timely moment, if I could phrase it that way, in the sense that yesterday, I mean, in general, the US dollar is such an important product to trade. But yesterday was a very fresh report with a massive impact, and it's certainly going to be a pleasure for me to talk about it. So anyway, let's get started. Again, yes, perfect. I see the confirmation there that all is good. Very good. Fantastic. Everyone, my name is Jose. It's my pleasure to be part of this webinar today with all of you. Thank you so much, Phillip Nova, for hosting the webinar and having organized everything. Thank you to you all for attending. And obviously, thank you to ICE as well for having such important, relevant, and useful trading products that make our life easy for traders, especially being in Asia. The title for today's presentation is the US dollar index jumping to a 2-decade high. I guess this is not new for anyone. Everybody has heard it on the news or seen it on the charts. Today the idea is to learn a bit more how the inflation and the interest rates affect the US dollar, and of course tie this education piece, if you wish, to market opportunities, okay, and how to exploit what's happening out there, because obviously all of these news, apart from very interesting slash historical, because it's been 20 years that the dollar was not hitting that level. Apart from that, we are traders here, isn't it? So we need to talk about ways on how to exploit such opportunities, different ways, by the way, because obviously we are all different traders with different trading plans, some shorter term, some longer term, etc., etc. And the idea is to go through different possibilities to make our trading better. On the screen, you can see my email address. If you'd like to have a copy of the slides as I reach the end of the presentation, for sure, feel free to email me, and I'll be more than happy to send you the slides or any question you may have afterwards when it comes to trading, ICE products, Phillip Nova, and all of the above. So happy to help. And also on the bottom left there, you can see some of our social media channels. If you want to go take a peek and you want to subscribe or like or both, that would be great. Anyway, so let's get started. And as always, with the financial presentations, we have a financial disclaimer, which I am highlighting on the upper left. It's fairly short, so I'm counting on you all to read it because it's important information, and since it's pretty short, so I guess that it doesn't take that long, and it's been fully highlighted. Therefore, I would assume that everybody has been able to take a look at it. So the agenda for today will be to go over short introduction. I just want to give a little bit of context to the presentation. From there, we'll move into where is the US dollar and what's next. We all know it's very high, but again, is that high or is not so high, or what's next, etc., etc. So let's talk about all of this. Is critical. From there, we'll talk about some important facts, which it's kind of like the way I think about some of the facts I'm going to share with you today. It's some of those facts that it's kind of like everybody knows, but at the same time everybody forgot, because in the last few, let's say the last 5 years, the last 10 years, even the last 2 years, for example, if you think about the pandemic, just to look at something shorter term, it's kind of like everybody forgot about the US dollar in a way, and everybody has been focusing on cryptocurrencies and markets of that sort because they have been on the news and it's been a boom and everybody was talking about it. And while that's obviously something very interesting that is happening in our financial industry, the US dollar is the boss, and it's proving itself. And again, we're going to talk about it more concretely throughout the various slides I have to share with you today, as well as I will be jumping into live charts. And again, you will see that some of the things that we may all know about the US dollar were kind of forgotten by the majority of people out there. And the lesson is there are certain things that we should not forget. Okay, so we will talk about that. Then, of course, we'll talk about inflation, interest rates, and how these impact the US dollar index. And then we'll talk about different applications. I would like to leave the session with, kind of like, different application models, different homeworks, if you wish, for different style of traders. And hopefully that way this presentation, apart from enriching from an educational point of view, hopefully also brings in some application possibilities for you all as traders. And by the way, I would like to welcome everybody. While we're going to have a Q&A session at the end, I would like to welcome everybody to interact with me on the chat box during the presentation. If the question is coming, if the answer is coming later, let me be the one to tell you. We'll have Q&A at the end. If you want to wait until the end, it's fine, but you don't have to. Okay, you can start phrasing your questions as we go. You may have seen as well that item number 6 there is a little bonus for you. So actually, I have 2 little pieces of let's call it a mini gift, which as a trader you will probably appreciate very much because it is very likely going to make your life a bit easier as a trader. By the way, no matter if you're new to trading or you are advanced, okay? So I'll get into that in a moment. And before I start, last one, I'd love to know a bit more about you guys. So if you don't mind typing on the chat box or the question panel, wherever you want, because I'm watching both. If you want to type just a quick sentence to define what do you trade, and maybe you are paper trading, maybe you're trading live, maybe you have traded for very little time, maybe you have traded for a long time. So whatever it is, if you could define a little bit more about, this is what I trade, this is how I trade, this is what I'm looking for. Any hint that tell me more about you guys as traders would help me to customize the presentation as much as I can to you. And since I also understand that this may be a bit personal, so when you chat, when you type the questions, you could choose to select 2 organizers or panelists, and therefore whatever you type will be only seen by us as organizers, and anyone else will be able to see it if you want to keep it anonymous, okay, which it's totally fine. But anyway, don't be shy, okay, don't be shy, so we can make this session count. So I said I would have a quick introduction, and first thing I'd like to say about me is that I speak fast. Maybe you have noticed it already. Maybe it's too fast. Maybe it's okay. So whatever that is, feel free to let me know. If during the presentation you need me to repeat something, to reinforce something, let me know. If I'm going too basic and you would like me to move forward a bit quicker, don't think that's going to happen, but if that was to be the case, feel free to tell me as well, because again, this presentation is for you. As a trader, I trade multiple assets. I love the markets. That's my life, and in that sense, I love to be surrounded by different products. Certainly, the dollar index, which is the product that we are talking about today, it's key, and it's a market that I would not plan a trade without looking at the dollar index. Okay, just like that. Okay, so we'll talk about this more in a moment. Trade with UFOs is the website where you can find us. So if you have never seen us online, you could go take a look. I would say don't do it now. Focus on the webinar now. But later on, you can take a screenshot of the QR code or make a note of the URL, tradewithufos.com. You may wonder, what are those UFOs? Well, they stand for on-field orders. They look like flying saucers on the chart. Well, we use them for market timing, okay? Because when you have sell-on-field orders, when price gets to a price point where you got plenty of sell-on-field orders, the market is likely going to fall from there. So you can catch a turning point, or when the market gets into a green UFO, you got buy-on-field orders, so you can catch a turning point to the upside when those on-field orders to buy get filled. So again, I am a UFO trader. I love the UFOs. I would never trade without the UFOs. But having said that, this presentation is for all style of traders, no matter how you trade, because again, the presentation today is going to be, concrete but generic at the same time, so it could help all of you, no matter how you trade. Even though you may, if you are curious to take a look at those UFOs, you can certainly take a look at our site. I'm reading at your comments there. Thank you for sharing, guys. Okay, trying to learn more about the Dixie. Very good. Okay, so reading your comments there on the chat box. Fantastic. Thank you for that collaboration, guys. Helps a lot that you guys are engaged and interacting with me. Do not be shy. Okay, remember that. Anyway, so here is a monthly time frame. The M stands for monthly. These charts, by the way, are using TradingView, which is a free charting software, which is very useful to do market analysis. Of course, once you find your trades on TradingView, then you want to execute them on Phillip Nova, isn't it? But out of being as generic as I can, I'm going to be using charting with TradingView. And here we are looking at a monthly time frame of DXY, which is the dollar index. Okay, later I will show you the tradable contract, which is SDX, which trades in the Singapore exchange, okay, which is the mini version of the contract of the dollar index, which is again very useful. But anyway, the reason why I'm looking at the monthly time frame is because I'm looking long term. We are talking about the dollar index trading around 106 point something. And if you look at the last time this happened, it was there. And if you look at when it was there, that was, my friends, in 2002. So we are reaching levels for the dollar index that we have not seen for 20 years. This is obviously a very relevant development, very relevant situation for the dollar. And one of the reasons why it's very relevant has to do with some of those key simple facts. For example, something that kind of like everybody knows, but everybody kind of forgets or never thinks about it. The US dollar is involved in more or less 80% of transactions worldwide. And that applies to someone buying a flying tickets to go on a vacation trip, all the way to a large fund manager having a very big trade on, gold futures, which gold is priced in dollars, or all the way to a gentleman buying stocks for a retirement account and stocks being priced in US dollars, or you name it. It could be for example, a chocolate company hedging the price of cocoa, which is also priced in US dollars. And no matter what it is, 80% of transactions worldwide are happening in US dollars. So obviously, whichever happens to that currency has an impact. And the impact is major because the products, the markets that are traded in US dollars are typically the most relevant markets in the world. So oil is priced in dollar, gold is priced in dollar, the largest stock market in the world is priced in dollar, the largest bond market in the world is priced in dollar. I can make a longer list. I'm sure you could yourself add more to the list. I just kept it relatively short just to, kind of like move into the next slide quickly, but you get my point. It is the most important currency in the world. And it's been shocking to me for years as a trader. While I trade everything, as I said, including digital assets, it's been shocking to me as a trader that in the past few years, everybody has put their focus on, let's say, digital assets. And it's kind of like no one was talking about the US dollar, which, if I go back to the prior slide, it's not like the US dollar was not doing things in the prior years. So look at such a move in 2015, more or less. Look at this move. Look at that move. All of this was during pandemic times. These changes of valuations of the dollar have a major impact in everything else. Many people blamed, for example, the crashes on, for example, Bitcoin and markets of that sort, because maybe something's happening with the Bitcoin, without realizing that the reality is that the dollar was moving, and because the Bitcoin is priced in US dollars, so then the Bitcoin is reacting to it. And it's something that, to my surprise, very few market analysts or economists talk about. Maybe just because I'm simply a trader and my life is to trade, it's something that to me is very clear. But again, it's not something that you see in the news too often. And I wanted to bring back this very simple fact to everyone's attention so we don't forget, okay? Because it's very important. The fact that so many markets are traded in US dollars imply that there are very powerful correlations with the US dollars. So most markets react to changes in the US dollar as the US dollar either strengthens or weakens. So for example, when the US dollar is strong, so what happens? Well, you need less dollars to buy whatever product you are trying to buy with US dollars. Why do you need less dollars to buy it? Well, because the US dollar is gaining strength. So you need less dollars to buy the same thing. So what happened to that thing? If I could be informal for a moment, well, that thing loses value. The price of that thing, the price of such product, which could be the price of stocks, could be the price of a commodity, could be the price of gold, could be the price of a cryptocurrency, the price of the thing goes down, and it may be given the supply or demand for the thing, for sure, given other factors, for example, other fundamental factors, but certainly the fact that that thing is priced in US dollar, well, when the US dollar gains value, that particular other asset will have the tendency to go down in value because you need less dollars to buy it. Okay, and this is something, for example, that you know, I remember if I go back in time all the way to 2008 when the US equities markets crashed, well, not only the US markets, the equity markets around the world crashed, and then they started going back up, and 2009, 2010, 2011, and the markets were going up and up and up and up and up, and everybody was like, how can that be? The economy is not so good, but the US markets are going up, the equity markets are going up. Well, in a way, it was quite simple, right? So there was a lot of quantitative easing happening. A lot of dollars were being printed. The value of the dollar was going down, which is my bottom bullet point there. So what happens when the value of the dollar was going down? Well, when the dollar is weak, you need more dollars to buy the same thing. So the prices of stocks in all those particular exchanges were going up. And it's not because the economy was so good that the stocks were, you know, gaining value. It's because the currency in which those stocks were priced was losing value, and therefore you needed more of those dollars to buy the same thing. So again, those are very basic facts, but I find many situations where I had conversations with traders and people in the industry, and could be semi-pro, could be retail traders, could be new traders, even sometimes experienced traders that, you know, you get focused on trading whatever you trade. Let's say you are an old trader and you get focused on that, and you kind of forgot that the US dollar is there. Okay, and one of my missions today, if I can, to help you be a better trader, is to never forget that the US dollar is the boss. Okay, so that's a very, very, very important statement at this moment in time. So now let's get into fundamentals, and from there we're going to move into the inflation conversation, which is the title of the presentation for today. So there are multiple fundamental factors that impact the US dollar. Okay, so one of the key factors is the Fed interest rates. Who is the Fed? The Fed is the Federal Reserve Bank. To someone's surprise, it's a private bank. Most people think it's a government bank or something like that. It's not. It's a private bank, and it controls the US monetary policy. And obviously, controlling the US monetary policy has a major impact on currency valuation. So changes on Fed decisions, such as the interest rates, have a big impact. Why? Because an increase of interest rates, like it's been happening, okay, and I would like to focus on the screenshot I got below here. Let me zoom in. So this was a screenshot I took yesterday, July 27, where, you know, at 2 a.m. Singapore time, that is 2 p.m. In New York, the new interest rate for the US dollar was about to be reported. The consensus was that it would move from 175 to 205, which is exactly what happened. So it became 205. And again, what does happen when interest rates are pushed up? Well, when interest rates are pushed up, they now attract foreign investment. Why is that? Well, because let's say there are many people that got currency kept in, you know, they got currency kept somewhere in the form of, let's use a few, you know, currencies from, you know, from our region. So, for example, Indonesia rupiah, Malaysian ringgit, of course, Sing dollar. So let's say you have some of these currencies kept in that particular currency, and next thing you know, now you could convert that currency to a currency you perceive as stable, as the US dollar, and now this on top of that pays you a greater level of interest rate. So what happens? Plenty of currency is being converted. And that is just because a lot of the currency was sitting in cash, and it was converted to be in a better place, perceived as a stronger currency, and then now it pays you better interest rates. So that motivates a lot of foreign investment to move into US dollar. But not only that, what about foreign companies that want to buy oil? Well, to pay for oil, you need US dollars. So US dollars need to be converted to buy oil, etc., etc. So you got raising interest rates create this cascade effect of money being converted into US dollar, and therefore foreign currencies are being sold in exchange for US dollar being bought. Another way to say that using economic terms is demand for US dollar. And as we saw, look at what happened with the chart of the US dollar. It's hitting a 20-year high. So obviously increases of interest rates have a major impact. Now, in a moment, we'll link the increase of interest rates with inflation. Okay, we'll talk about that in a moment, but also I wanted to point out the fact that other things such as unemployment rate, the GDP, the inflation number, which is normally measured using the CPI, the Consumer Price Index. So all of these various economical indicators are often key, for the value of the US dollar to change. Okay, so inflation, okay, which is the key ingredient for today's conversation. Inflation is something that is often very, very concerning for countries, and the central banks, in the case of the US, is the Fed. They always try to control inflation by making changes on the interest rates. Take a look at the following chart before I get deeper into this concept. So by looking at the following charts, we can see the historical inflation rate in the US. This is the CPI. This is the yearly CPI for the US, which is currently around 6%. So what happens that when the CPI goes up aggressively like it's doing now, so we are in a very inflationary situation, which is perceived as very problematic in most countries. And central banks want to fight that. What is the classical action to try to fight that? Well, again, let's think about why do we have inflation? Well, we have inflation because there is too much demand of products. Too many people are buying too much of everything. And because there is too much demand of everything, so prices go up because everybody is buying everything. So now the problem is that there is too much demand of everything. That's inflation. That's the bottom line. That's the problem. So how do you stop people buying so much, right? Well, one classical action that has been studied for decades by economists is the rise of interest rates that we can see in the bottom chart. The bottom chart represents the interest rates that were risen yesterday to 2.5%. Okay, that's where we are now, 2.5%, between 2 and 3. And notice that this started happening more or less towards the beginning of 2022, which 2022 on the upper chart is more or less here. So in other words, you could argue that the Fed was a little late, like most of the times. When inflation already surpassed kind of like 5%, that's when they're like, oh my God, this is too much. Let's start raising interest rates. And they are now raising interest rates, trying to create an effect where borrowing money becomes more expensive. So people will spend less on their credit cards, people will get less into personal loans, etc., etc. Same for companies. And therefore, they will slow up the spending. They will create less demand on everything out there in the world, and therefore the price of things will go down. And if the prices of things go down, then the inflation rate will come back to something seen as a healthier level for inflation. Because, again, I'm not an economist, I'm just a trader, as I said, but typically in the world of economy, a little bit of inflation is being seen as something positive because it means people got money to spend, which means people got money to pay taxes, which means people got jobs, and that kind of environment it's normally perceived as healthy. But when people are spending too much, then this creates a collection of risk and problems that the central banks want to control to bring that inflation rate back to a healthy level. Okay, which again there are many schools of thought out there which I won't get into to define what is the right level for inflation to be healthy. That's a totally different story, okay? But the bottom line is the interest rates are being risen because of the inflation, right? And the moment that's happening, so that has an impact on the US dollar, as we saw, bringing the prices up in a major way. So again, here is the chart of interest rates being risen since beginning of 2022. This is now a daily chart of the dollar index. You can see here in the background the D for daily. That's a daily chart of the dollar index, DXY, right there. And notice what is basically happening since interest rates are being risen. How much currency is being converted into US dollars to either purchase things or just because they can now get a greater level of interest rate. Amazing, amazing. So while this is happening since 2022, again, what happened to the equity markets around the world? Okay, let me move to real-time charts for a second here. So this is a real-time chart on TradingView. So if you look at, for example, a classical market index, the S&P futures, right? So if I look at the S&P futures, for example, and I was to look at a weekly time frame of the S&P, so from January 2022, we got a pretty relevant crash. You know, if you measure all the way to the bottom, there is about 25% crash. If you look at markets such as, for example, I'm going to look at the Bitcoin futures contract that trades in ICE. So major crash on the Bitcoin, also starting around January 2022, and the crash started a bit earlier, but from here to here, dropping from 48,000 all the way to 23,000, roughly that's 50% drop. So why is that 50% drop happening? Well, it's because the US dollar is strengthening. So again, one of the lessons, okay, to learn from today's presentation is that the dollar is the boss, or is being proven to be the boss, even though many people forgot who the boss was. If I could use a little bit of humor, well, now, you know, here we go. That's the Lao Pan, right? He's proving himself. Anyway, putting my maybe funny humor on the side, let's get serious here, okay? Any question, by the way? How is it going? Give me a little feedback on the chat box, if that's okay. If all is going well, let me know. If I'm going too fast, too slow, any questions so far, please let me know. Do not be shy to share some feedback with me. So, conclusion. Fundamentals could be a great ally when trading the US dollar. For example, yesterday, it was 2 a.m. local time. You got the interest rate number being reported during the FOMC meeting that happens once a month. It was tremendously important. It created plenty of volatility. So if you look at the dollar index chart, and by the way, you can look at it in the form of DXY, which is the dollar index itself, which is not a tradable instrument. It's just chartable, but not tradable. But now you click on SDX, and now you are talking about the tradable futures contract that trades on the Singapore exchange, which, by the way, market data feed, real-time market data feed is free. You just need to go to TradingView, and then you see the green dot there. So, you know, if it's not green, if it's yellow, you would just click on it, and you would enable real-time market data. With many other exchanges, you will need to pay a fee to get real-time market data, but not with the ICE Singapore exchange. So you just need to click here and activate. In my case, because I've done it already, it shows green. But if in your case it doesn't show, you just need to click and activate the real-time market data. So make sure you do that, okay? Now, so again, you got the SDX, you got the DXY. It's the same market, as you can see, right? It's the same thing. But now let's take a look, for example, at a 2-minute time frame, just to look at, you know, what was happening at the time of those reports, right? So take a look at, you know, let me see, let me make no mistake. I got the time zone, I got it as exchange, very good. So let me go back to, here we go, 2 p.m. Okay, so that was 2 p.m. in New York. This is when the report took place, okay? So what happened there? Major move, okay, major move. So of course, if you are a trader and you want to use fundamentals to take advantage of moves, guess what? With the dollar index and therefore with SDX, you could be trading, as we said, GDP numbers. You could be trading FOMC meetings with changes of interest rates or lack of changes of interest rates. You could be trading CPI numbers. You could be trading unemployment numbers. Again, if you are a fundamental trader, a news trader, this is a market which is fantastic for this type of application. And you can move to very low time frames. I'm going a bit extreme here. Again, not too many people trade a 2-minute time frame. Maybe you trade a 10-minute time frame, a 15-minute time frame. Maybe you do trade a 2-minute time frame. Whatever it is, depending on your trading style. But again, very, very relevant market movements thanks to fundamentals. So certainly fundamentals could be a great ally when trading the USDX. Now the USDX is so relevant that it could be trading by itself, no matter if there are economic reports or not. So notice what's happening now to the US dollar. Well, there is nothing going on now, right? Because yesterday we got a report. Whatever had to happen, happened. Great move to the downside, then nice move to the upside, another nice move to the downside, a lot of kind of like stabilizing prices, and now the dollar index is trading at this level. Okay, so now what? So let's say you are, let's say you plan your trades out of a 1-hour time frame, right? So again, as a trader, as a trading technology company, we use something called auto climate. We use something called auto UFOs. These are the UFOs I was mentioning before. Those are the flying saucers. Buy on field orders, sell on field orders. So what can you do? Well, very simple. Find your trade. So, a little earlier in the day when it was good trading times in Asia, so you could have looked at the market. There was a red UFO right there. So when price comes to the red UFO, you get short, and then it drops. And when it gets to the green UFO, you take your profits. And that was a 2-hour trade. And there is no fundamentals going on. The fundamentals took place the day before. So bottom line, no matter your methodology, and maybe you don't use UFOs, maybe you do breakouts, maybe you trade FIBs, maybe you trade, I don't know, mean reversions using Bollinger Bands, whatever you trade. There are a million ways on how to trade. My point is, the US dollar index is a fantastic market to be used to take advantage of news, but also is a very powerful market to use any other day. Okay, it also helps trade other markets better to be used as an odds enhancers. Okay, so let's say, for example, that you want to trade any market. Maybe you want to trade Brent futures, right? And let's say at that moment in time, right, what I was pointing earlier, let's say Brent futures, which is trading in US dollars, let's say Brent futures is getting into a green UFO. Okay, let's pretend, I'm looking at the time, we have limited time. So let's pretend Brent futures, it's coming into a green UFO. And while Brent future is coming into a green UFO, and you would expect it to gain value, okay? Or maybe you don't call it a green UFO, maybe you use support and resistance, and that's a support, right? You have a support line there, whichever that is. So if Brent future comes to a support, and at the same time, the dollar is coming into resistance, or in my case, I would say a red UFO. So now you have two forces pushing in the same direction. The fact that the dollar index, which is the currency traded in 80% of transactions worldwide, is likely going to lose value, will make it easier for a Brent contract, which also trades in the Singapore exchange, to gain value. And now you are using your US dollar as an odds enhancer, which is another very powerful application. So the US dollar is a powerful odds enhancers when trading any US dollar denominated markets such as stocks, oil, gold, commodities, cryptocurrencies. You may be trading the Bitcoin futures, the mini Bitcoin futures in the Singapore exchange. Very small price point, very limited margin, great market to trade. But now, instead of just looking at Bitcoin to trade, you are relying on two charts. You're looking at the US dollar and the Bitcoin futures, and you take the trade when the two markets give you a confirmation, which increases your odds and makes you a better trader. So again, just sharing little tips, things that I do look at myself. So the US dollar index can be traded efficiently with a control risk, thanks to the fact that in Singapore there are mini contracts. So it's 10 times the size of the size in the US exchange. So it makes it very, very nice to hedge, to take trades, even with small accounts, to control, to have multiple targets where you scale out. I take out 2 contracts at this target, I take out another contract on my final target. The ticker symbol in Singapore is SDX. If you use TradingView, to chart the continuous contracts, it would be SDX1 exclamation mark, and the market data is free. So pretty cool. Anyway, I have a few examples here, but instead of going through the examples on the slides, I'm going to look at the examples real time because we have limited time. And as I said, if you would like to have a copy of the slides, I am certainly happy to send you a copy. I will share my email address in a moment, and you can email me so you can get to see these slides, because I guess I was a bit greedy and we won't have time for them, but certainly happy to send them to you. And I said before I get back into the charts and we go back to also Q&A, that I had a few bonuses for you guys. So be ready with your phones to take a couple of QR codes there. So first, here's a QR code that could be very interesting to you. We produced a 2-hour special training session that talk about all the ICE Singapore products. This is on our YouTube channel, so everybody can watch it. You just need to go to that link. So take a screenshot. So you can go in there and you can learn. Ian earlier mentioned about the ATI, which is the technology index. I mentioned a moment ago the Bitcoin futures. All of this is in that video, so you can learn more about other products which are also ICE traded in Singapore, great ones. Okay. Hopefully you have the screenshot. And then another one I wanted to grant you access to is the auto climate, which I mentioned a moment ago, which is a tool that we use in our analysis to understand what's the climate, what's the market environment. Should you be a seller? Should you be a buyer? Is it time to pass and wait? And maybe 1 hour later it's time to trade, but not now. So again, knowing the answer to this question, of course, depending on different trading methodologies, it could be done differently. But in our case, we use auto climate because it gives you a statistical measurement that tells you, what gives you a probability on your favor. And this tool is free, even though there is an activation fee, which you could waive thanks to the coupon code claim8. Okay, so you can get your climate by using claim8. Okay, so make sure that you use it when you go to our website and you turn on this tool if you would like to. You don't have to, but hopefully this is useful. Earlier, some of you mentioned on the chat box that you are in the process of learning how to trade. So if you are still developing your methods, hopefully this will be useful to you. Okay. So let me get into the chart. So we look at another application because again, I would like to at least give you one more. And I'm looking at questions out there. Since we're getting close to the end of the session, guys, I would love it if you guys could start typing your questions. Okay, so while I'm doing one more application, let's pretend we just hit Q&A time, and whichever your questions are, please type it in. If you have no question but you want to say the session was good, or you want to say the session was not good to me, please share that as well on the Q&A, so we know better what you need next time, or if it was good. So then that's gonna make my day. So go ahead and type it in, okay? And I'll do one more demo, and then I'll look at the questions, and then we'll conclude the session, okay? So again, in this particular application, I was looking at the 1 hour time frame of the dollar index. Symbol is DXY. So let's say instead of using the 1 hour time frame, you are using at the 4 hour time frame. So again, same application. You would be looking at first, what is the climate? So I mean, I'm just sharing how I trade. So the climate is blue, so that means that you have permission to go long. Okay, you have a statistical advantage being a buyer. This is what AutoClimate is suggesting. And here AutoClimate is telling you that if you become a buyer, which the current status of the climate is 1, then the duration for an up climate is supposed to be, based on statistics, 7.42 candles, 4 hour each on the way up. So I would say that if an up climate is supposed to last as a normal thing to happen, because it's a 1 standard deviation, if that is going to be 7.42 candles, I guess that definitely we have time to reach 107 as a target. So, I would love it that the dollar comes down to this price point, 106.58, and from there, based on my trading style and my trading methods, I would now identify this price point on SDX and get ready to buy at 106.58 with a target to be 107.69. And in case I'm wrong, because of course as traders we also should plan for when we are wrong, I would set a stop below 106.05. So then the most I can lose is this. And if I'm right, I'm going to make this, which as you can see visually I'm just gonna be lazy if that's okay, and I won't do the math, but it's kind of like, visually speaking, something like a reward to risk ratio of 2.5 to 1 or something like that. Okay, so in this case, again, nice opportunity. So let's say instead of a 4-hour time frame, you are a short-term trader and you are doing 8-minute time frame. Let's say you are a Fibonacci guy, you like to trade FIBs. Okay, so in my case, here I would pass. And the reason why I would pass is because while we are in a confirmed climate, blue climate to the upside, this climate is supposed to last 5.73 candles on the way up. And this climate has been running for 20 candles, which tells you that statistically speaking, this climate is overextended and therefore is likely going to drop by 5 candles. And after it drops by 5 candles, we are now back to a healthy market condition. So if after that it was to come to the green UFO, again, I would be happy to go long and ride the move with a target located at 107.00. So again, entry, the green line, stop, the green line below, target, the red line above. Okay, and again, in this case, we are talking about, again, a 2 or a 3 to 1, something like that. Okay, okay, 2 minutes to hit 8 p.m. So I need to turn now to the chat box and take a look at your questions. Where to get the UFO indicator? You can take a look at that, Patrick, in our website. So again, our website is tradewithufo.com. Okay, we support multiple platforms as well, so you can take a look. And also, I said I would share my email. So jose@traddictiv.com. That's my email address in case you have questions, you want a copy of the slides or anything. I missed the last slide. Could you help show it again? Yes, I'm going back to this in a moment. Well done. Thanks for sharing. This is very kind of you. Thank you so much, Ko. Very good. And I see the other comments there were answered already. It seems that we are 1 minute away from the ending time of the session. I guess that being traders is all about market timing. So I guess that we're going to have to conclude the webinar on time as well. But again, if you have one final question, of course, I don't mind to stay a couple of extra minutes to answer. So please type it in. And in the meantime, just in case you don't have any extra questions, so I want to say thank you again to Phillip Nova. Thank you to ICE. And most especially to you all. Thank you so much for joining me and allowing me to share a little bit of my passion in trading. And in this case today, very specifically, the US dollar index, which again, it's always nice to talk about trading and talking about the dollar. But in such an important day right after the increase of interest rates, I think that hopefully today's webinar opened your eyes if you never knew the various topics that we discussed today, and hopefully it counted. And if that's the case, that was my intention. So thank you for attending again one more time. Very good. So Phillip Nova, the mic would be back to you then in case there is anything that you'd like to say, or if not, the session is now over. And thank you so much, everybody, one more time.
All right. Thank you for the insightful sharing, Jose. We will conclude tonight's webinar here. We'll be sending everyone a link to today's webinar recording so everyone can watch it again if you'd like to. That's all for today. So thank you again, Jose and Ian. Also, thank you everyone for your time tuning into the webinar tonight. See you at our next webinar session. Have a good night.
Thank you, everyone. Bye-bye.
Thank you. Bye-bye.